Welcome to Leverage to Build Wealth, where we discuss and educate entrepreneurs, mortgage, real estate, and financial service professionals on how to leverage tools and other people's experience to truly leverage to build wealth to create the lifestyle and legacy you desire. Hello, welcome to today's episode of Leverage to Build Wealth. Today, my special guest is Christina Harmes Hika. She is the queen of reverse mortgages, and she has her own coaching platform. It is incredible. She is the name in the mortgage industry when it comes to reverse mortgages. And so I'm honored to have her on as a guest. Today, we're going to talk about different ways to build wealth with the reverse mortgage and kind of help iron out some of the misnomers and misinformation that is out there so people can feel confident and safe and excited about moving forward with this incredible investment tool. And that's how I use it. Like to position this, because that's exactly what it is. It's an investment tool that can help people build a lot of wealth, save a lot of money. I mean, it's pretty awesome. But welcome to the show, Christina.
Thank you. Thank you for having me. It's an honor to be on here with you.
All right. Well, if you can lead us out, please, with your story, a little bit about you and why you got into this very niche product space and why you're passionate about it, please.
Yeah, for sure. So the long story, I'm not going to give the whole thing, but I started in my dad's office when I was 16. And he was a mortgage broker.
Oh, wow.
And through high school, through college, I became the first-time buyers specialist. So I would help first-time buyers with their mortgage and the real estate. And I got to tell you, handing a first-time buyer the keys to their first home, it was the coolest thing. It was just so intrinsically amazing, and they were so excited. It was like handing somebody's dream. Well, when I did my first reverse mortgage, I was around 24, and we had a couple who had some debt to pay off. The husband had a little bit of health concerns. The wife had never had to deal with the finances. This was the first time in her life where the finances were constricted at all. I mean, she showed up to one of our meetings almost in like a beautiful fur coat. And I remember thinking, oh, she's out of her element in this financial constraint they were in. And they were, not everyone is, not all my clients are, but in this particular case, they were. And so they needed some extra income. They needed to pay off some debt. They needed to pay off, have a line of credit. So whatever the future might hold. And through this process, I learned so much. And the biggest thing, the hook, right? The hook, line, and sinker. At closing, I was at closing. We did, million signatures to get through the closed reverse mortgage file. And she hugged me. And when she did, she had tears in her eyes in a good way. And she was she was smaller than I was. I remember hugging her, and I could just feel the relief wash over her. And that changed me, because it was like handing somebody the keys to their first home on steroids. I was handing somebody the signed papers for the financial security for the rest of their lives. I mean, she could, and this was important to her, she could stay in that home to be 120, 130. If he passed away, she was going to be protected with her cost of housing, no mortgage payment. She actually got some money every month with a line of credit as a safety net after paying off this. It was actually an IRS bill. They had done some tax things that they weren't totally aware that they did, and made a mistake, got that paid off. And it just changed me. And I said, okay, I love working with seniors. This thing is kind of intricate, kind of hard. It took quite a bit of I have a finance and economics degree. And so I kind of like that aspect, to really use my brain and to figure out the puzzle pieces. And so I said, I want to do more of these. So from 24 to 27, I branded myself, even though I did regular mortgages and I was still selling some real estate, I branded myself as the reverse mortgage person. And and this is the marker in my head, I think I was about 27 when a client that I'd been working with, who wasn't in process yet, he was just considering the reverse mortgage. He says, I was out golfing and I mentioned to this stranger that I was golfing with, I was looking at a reverse mortgage, and he stopped and looked at me and goes, wherever you're doing it, stop. You need to go with Christina Harmes.
Wow.
And I never found out who that person was. So to me, it was just like,
Wow.
okay, I'm making an impact. Strangers around San Diego know that I'm the one to go to make sure they're taken care of. And my life was changed forever from that. So then I oriented my whole business around reverse mortgages, and I haven't done a forward loan in years.
Oh, wow. Okay. Uh, I love the fact that golf story is pretty darn cool because your reputation is preceding you, and that's how I got to be introduced to it. Is I saw in so many different circles, because my native career is mortgages. I'm uh, I'm not transitioning away from, but transitioning into and adding financial services to my professional toolbox, and for my agency for my clients. And so you know how it is in the mortgage industry. It's a kind of a fairly niche, um, career. And so you see a lot of familiar faces. And I was seeing you pop up anytime a conversation that about reverse mortgages was popped up on any kind of comment or something like that on Facebook. I always saw that you were tagged. I always saw that you're the one that was recommended. And for me, in an industry of a lot of, I don't want to sound offensive, a lot of me type of professionals, to see a lot of referrals outward versus just put their hand out, and I understand, you're in business to make money and stuff, but you don't see that many times when someone else is referred out. They just want to put their hand and say, "Hey, give me all the referrals." But because this is such a sensitive topic and one that is can be truly life changing and extremely impactful for somebody, to have that trust in an industry where you're the name, not just a name, I think is incredible. And that says a lot about your professionalism, because your reputation is incredible. And that's how I got introduced to you. And so I think that's really, really neat for any kind of professional. But, I think it goes without reservation to say you're the GOAT when it comes to this topic. But
Well, thank you.
uh,
You're making me tear up.
well, it's legitimate, and I also know that you have your coaching company that you created as well to be able to help loan officers learn this. Can you tell us a little bit about that? We'll talk about some of the details on how to make this important, but there are a lot of loan officers who will be listening to this, whether now or eventually, and this can be an incredible, valuable skill set to learn. Can you talk a little bit about your coaching platform?
Yeah. So thank you. What you said, I found to be really, really a blessing. I was finding that loan officers were coming to me, were referring to me as the reverse person. And what I would find sometimes was they would message me some details. I would say, okay, this is what you're likely looking at. And hey, this might be pretty difficult over here. And then they would say, okay, thanks. And they would try to do the loan themselves.
Oof.
And in the past, I've helped manage really large forward bases. So 1,000, 2,000 forward loan officers. And I saw how that went. Then there's some really bad pitfalls. So in the past, I'm guilty of this too. In the past, for a regular mortgage, if I had a client come to me and say, hey, I want to do a USDA loan, I want to do a VA loan, I want various types of loans on the forward side, for the most part, the mortgage works the same, right? Once you put it in place,
Yeah.
you got 30 years of payments and then it's paid off and the interest rate either adjusts or it doesn't. And there's some real normal parameters.
Yes.
Well, reverse mortgage isn't that way at all. It's much more like a financial planning tool, like an insurance product, which you'll find out in your business. I'm excited for you for that.
Thank you.
Um, so what I was finding was they would blow the client. And unfortunately, when a senior is told, no, you can't do a reverse mortgage, a lot of the time they don't look elsewhere. And so I had this big passion of let's just educate everyone. How can I help loan officers? Yeah, some of it was like my mother-in-law. She only trusts me. So I have to do the mortgage. How can I work with you?
Yes.
And so when I worked at big companies, I could work with the loan officer, but then I didn't love the parameters and it wasn't available to everyone. I wanted Specifically, I really think brokerage is really important for reverse mortgages.
Yes.
To know the whole landscape, have access to multiple lenders, have access to multiple rates, multiple programs. So then within that, mortgage brokers are pretty independent. So where can they go where there's, not a big sales management?
Hmm.
And so I thought, well, let me see if I can create an outsourced reverse division for brokers
Nice.
specifically.
Nice.
And that's what I did. I have a reverse mortgage coach. It's learningreverse.com. And I just started because I had one month where I became the reverse name. And I had this month where I took so many 15 to 20-minute pick my brain phone calls.
Yeah.
And at the end of the month, I felt pretty good about myself. And then I realized, those loan officers didn't learn enough to actually do the loans. They're they're barely knowledgeable enough to be dangerous, which is terrible. I don't want that unleashed on the senior population, especially with a product where we already have a bad reputation or it's just complete fear of the unknown, right? So then we've got that. And then I realized my income took a hit.
Yes.
So all of those factors combined, I said, this is not a smart way to go about this. I'm not actually helping anybody. I'm not helping myself. So how else can we do this? And so I created a 5-part masterclass series for loan officers that took them from I have my first lead all the way through thank you, your loan is in process. So that was my very first course. Now it's Reverse Mortgage 101. From that, I developed a whole set of products. I have a coaching package. We have a weekly mastermind. We have marketing materials, just everything a loan officer is looking for that they would probably get at a really big company that's not going to have the best pricing, not going to have the best rates, going to have a lot more control. It's available for brokers so that they can pick and choose what is going to help their business and really have this. The other part of it was reverse loan officers are often one at a big shop. Unless you work for a retail department of a reverse mortgage lender, which there's not that many, there's only like 4 really big ones. For the most part, we all felt like we're on an island. And so I wanted to create a community where people could come and share what's going on, get expert advice. And truly, part of this was in the reverse mortgage field, we have borrowers pass and we get really close with our borrowers. And when that happens and you go to the normal mortgage broker community, you might have 1 or 2 people who can relate out of a big pool because most borrowers are much younger and they don't reverse mortgages take a little while longer. And we stay in contact, I think, a little more than I ever did with the forward side. So it was really nice to create a community of people where I could come and say, guys, I just had a borrower pass and have them truly understand what that felt like and what that really meant.
That really stands out to me on a couple of cases. Two different points here. One about the community itself, the reverse, but also one of my pillars that I'm seeking to attract to the channel is entrepreneurs. And whether or not they're in the financial services, mortgages, or anything like that, entrepreneurs itself. And what I love about entrepreneurship is there are common threads that make entrepreneurship. And one of those is recognizing a need and filling that need. You brought up an interesting point. Hey, I'm helping people. You see the need. But then at the end of the day, you're like, well, I still have to take care of my obligations, my financial goals. And you're like, oh, what the heck? And I know some people, if they have a mindset of, hey, everything should be free at all times. And why don't you just give everything away? And why do I have to pay you for something? And for me, that causes me frustration. And I'll explain why. And this is not just speaking to you. This is like to everybody. Because when you have something of value and it's just free all the time, it's not often valued. It's amazing how when something is free, it's trampled under its feet, no matter how valuable it is. But as soon as someone puts a penny, puts $1 to something, just think about it. If you're watching a game, if you're watching the Super Bowl coming up, and as soon as you put money on the game is totally different to you. No matter who you love, as soon as you got money in the game, it's different. It's the same thing for your career. Well, to what I love about it is you can give, as you mentioned, 15 minutes, 20 minutes, half an hour of pick your brain. But because you have so many other responsibilities in your life and different roles, you're limited both by time and the circumstances to for the value and quality of the information you can provide. But when you did what you did by creating this new company, you provided a way that you can give now your best your best work, your best efforts, your best attention. And so for aspiring entrepreneurs and someone who's wanting to go into it, it is something to promote. It's like, yes, I am so valuable. I want you to be part of this community because I can give you my best efforts. You're not slinging this as just an idea. It's not just a passion project. It is a business filled with passion. And I'm sure that exemplifies and comes through in your training. And then, so for those who have the advantage to take who have the opportunity to take advantage of that, they're able to get you at your best. And I think that's incredible. And that's a lesson that any aspiring or new entrepreneur should really pay attention to, because that can really change their life, and not only their life for themselves professionally, but those in who they have the opportunity to impact. And so I think that's really neat. And to the point of the community that you created, wow, that is awesome, because again, going right now in the mortgage world, there's a lot of pain in a lot of different topics. A lot of people are struggling with the market, and their stresses have been on display a lot lately, and especially the past, say, 2-3 weeks. And when people are stressed, they say and do things that are out of character. And I've been noticing on the sidelines, people saying things that they're eventually going to regret if they haven't already, because once you put it out there, it's out there. But to be a shining light in a community, that you're leading the dialogue, reverse mortgages and the passion what you're doing, and to be able to say, hey, we're a lighthouse here. We want to shine light. We want to add value. We want to be able to move the needle. I think that is incredible. I think it's really needed, especially in our industry right now, when there's so many different people for a variety of different reasons. Some, and many of them legitimate. I think a lot of people are, they have a voice, they want to be heard, and they're struggling, and they just want to feel value. And I think the community that you're creating, especially for this niche, is wonderful. Now with that, to go to the heart of the matter of what reverse mortgages are, there is so much different misinformation out there. So for a client, who, like, say I have an aspiring client coming down the road, and I want to be able to point them to this episode, can you address some of the misnomers that are out there? Maybe some of the reasons as to why those misnomers are out there, what's been rectified, and then how a reverse mortgage can be, everyone's individual circumstances are different, can be an incredible financial tool for them. Please.
Absolutely. Thank you for the opportunity. So elephant in the room, right? Christina, why have I heard reverse mortgages are bad? Number one thing, because people just hear bad. They don't really know why. Well, it didn't help that we had advertising on late night TV. Those were the least expensive commercial slots for a long time. That's where the commercials landed. Reverse mortgage is this tiny little industry. We kind of get the leftovers. We get the tech later. We're just the redheaded stepchild, and so with that, we don't have a lot of awareness. And one of the most important things that I think is important to recognize in this conversation, a reverse mortgage is one of the youngest mortgages out there. So VA was established after World War II. It has had almost 100 years, not quite, but almost 100, to get refined, to get details and kinks worked out. The reverse mortgage, the home equity conversion mortgage, which is the FHA insured kind, was only signed into law by President Reagan in 1989. Now, I'm 37. I was born in 87. That means the mortgage is just 2 years younger than I am.
Wow.
And through that, and it's this weird mortgage, right? No term. What do you mean, no term? Mortgages have a 30-year term. What are you talking about? There's no term on a reverse mortgage. The note literally reads, the lender has the right to reassess the note 50 years past the youngest borrower's 100th birthday. Nobody's gotten to 150 yet, so who knows what that'll look like. But it's this weird thing. So when do you pay this thing back? And wait, there's no payment? Of course there's a payment. Mortgages all have payments. No, it's a deferred payment loan. You don't have to make the payments while you're living. You do pay the whole thing back once you're passed or when you decide to sell. Oh, the bank owns my home. Nope, it's still a mortgage, which is just a lien on title, just like any other mortgage. The difference is that instead of making a payment every month, like you do with your existing mortgage, you don't make a payment and that it's added to the loan balance. So it's a really hard concept for people to understand. Now, in the beginning of COVID, when we saw the 6-month payment deferrals, everybody in the reverse mortgage community went, oh my goodness, people finally understand what that means. And what happened there was people didn't, if you got this deferment with their mortgage companies, they didn't have to make payments for about 6 months, and it was just added to the back of the loan. Same concept with a reverse mortgage. What are some other misnomers we hear about? Some of the myths. Oh, well, one of the big protections that was brought into place in 2015 was now we protect non-borrowing spouses.
Yes.
One of the reasons reverse mortgage has a black eye in its reputation, and I'll be the first to admit it is a black eye, the program was built around seniors, right? With the intent that, well, you're closer to passing away. So we know this mortgage isn't going to be out for the next 100 years, likely. It's probably going to be out for the next 10 to 20. I think the average reverse mortgage is held for 7 years. So the investor, I had a client recently ask me, why would anybody do this? Well, because if they can hold out for 7 years, they're going to get their interest all paid back at once instead of in a monthly amount like other mortgages. And so with that in mind, I just totally went blank. And that helps me relate to my clients too.
Well, you're talking about the 7 years getting your return.
7 years. So they hold the mortgage for about 7 years. And I like to joke and say, you're really betting the bank. I'll outlive what you think I will. And, the person who lives to 120, if they have a payment that comes to them every month, which is not the only structure, but it's one of the structures, they're going to get that monthly payment every month until they leave the home, horizontal or otherwise. And so if that's that person, they have gotten an astronomical value. Now,
Yes.
couple that with the fact that a reverse mortgage is a non-recourse loan, which is very unique, which means it doesn't even show up on borrowers' credit reports because this is a loan tied to the home. It's collateralized just by the home. So let's go back to 2008. The situation did happen, right? We had a really large real estate value crash. Values were here, they plummeted. Now, one of the reasons the reputation for reverse isn't great was because they used to lend way too much of the home's value. They don't do that anymore. But in 2008, there were mortgages that looked like this. So they had a mortgage balance here, the home value is here, but then suddenly 2008, the market crashes. Now the home's value is here. Well, what happens? Nothing. Keep paying your taxes and insurance and living in the home, and this doesn't matter. In fact, if you have a line of credit, which is one structure for the reverse mortgage, it can't even be frozen in this situation, which all lines of credit in 2008 were pretty much frozen. So the happiest person on the block in 2008 was the one with a line of credit through their reverse mortgage.
Wow.
It's meant for seniors. It's meant to help protect them in their longevity in their home. So then let's say that situation happens. It's a non-recourse loan. Well, are they going to look to my heirs? Are they going to look to my estate? No. There's an FHA mortgage insurance premium that you do pay upfront and ongoing. It's disclosed in all the loan documents. It will pay the difference back. So your heirs will still inherit any other assets. They're not going to be saddled with whatever difference is there. So it's a really protective mechanism if you do think you might live a very long time.
Yeah.
There's lots of different reasons people do reverse mortgage, but that's one of my favorite. Let's protect your housing cost. All you're going to have to do is pay taxes, insurance, any HOA, and live in the home as your primary residence.
You brought up a good point that I think does really well for people when they're considering this, because like, let's just use a scenario where a person passes and the bill on the house to be paid is the same as the value or higher. Okay, let's just go to no equity left. This scenario. And so worst case scenario for a client, because I like to get to worst case scenarios and then work our way backwards when I'm talking to my clients, so we can just get the elephant in the room done. First off, there's a lot of different financial tools that you can have, like life insurance. They have a whole lot of different type of programs that if you wanted to, you can have that pay off the house. You don't have to, the family members, they can refinance it, to buy it. And they're not, when they refinance it, or purchase it outright, they're buying it at the market value of the house, not the loan balance, which I think is really incredible. So if your parents, graduated and the loan was 700, but the house is only worth 500 or 600, you can buy it at the $500,000. Matter of fact, if I remember correct, there's even a built-in equity, like 3% or something like that they allow, so it's easier to buy the house without a down payment, right? Isn't it something like the minimum standards of like a
We call
conventional
it
FHA loan,
90.
something like that?
We call it a 95% rule.
There we
So
go.
the heirs can purchase the property for 95% of the current market value.
There we go. So even if the balance is higher, they owe 700,000, the house is only worth 500, you can get a loan of 95% of the 500, to be able to do it. But in my experience, and tell me what you've seen, people don't want to inherit their parents' houses. Most of the time, when someone inherits a house, they have to refinance it if they want to keep the house, or they just need to sell it as quick as they can because they don't want to deal with the payment, and and at that very vulnerable state, they're more trying to figure out the nature of how the heirs are going to be taken care of. No one really wants their parents' house, because most of the time when you're talking about adults, they have their own life moving on. They got their own homes that they have, and they just don't want the house, or the memories that go with it. A lot of times that's what I have noticed just in my observations. And when I've talked to realtors who are trying to sell a property because someone passed away, their parents passed away, it's usually the kids just don't want it. They just want to I don't want to sound weird on it. They just want to cash out, and not deal with the headaches. And so I've noticed that tends to not be that much of a problem when you're addressing that particular situation. Like, hey, it's not going to be a burden for your children if they don't want to have the house, in that regards. What's your thoughts and perspective on that?
Yeah, I think it's really important to address because what you're seeing in action is what I see as well. But what we don't recognize, and I think all people doing reverse mortgages need to ask this question, is what do you intend for the house when you pass? Because what people think that their kids want versus what their kids actually want are not always the same thing. And often they're not. And so sometimes I'll send a client after our first conversation and say, okay, we'll go figure that out. Because if we're going to put this in place, we need to make sure that that heir or those heirs can qualify to refinance this in whatever amount of time you think you have. And people will typically, so we'll estimate I'm going to live another 10 years. What does it look like at that point? But the reality is when there's multiple heirs, okay, is one going to want the physical home themselves? And that makes people think? And they go, well, I've actually never considered it. I just always thought I should leave as much as possible to the kids, and the house was kind of the thing. And then you dig a little deeper and say, okay, well, you've got 3 kids. How much equity do you want to leave each of them? Well, as much as possible. Okay, so stop eating, go sell your car, take off all the payments, rent out your rooms. It's just it's a weird general concept people have of as much as possible. Well, okay, as much as possible. I mean, I've had clients come to me who are eating cans of tuna and that's all they eat all day. And we don't want you living that way. So let's put some numbers behind this and really flesh this out. And when we do, well, okay, if you pass away in 15 years, right? I kind of point to a specific line. In 15 years, we can leave each heir 200,000. Is that enough? Will that satisfy you? And wow, yeah. And from now till then, you have no mortgage payments, or maybe you have a line of credit, or maybe you're getting some cash now to remodel the place. There's just so much flexibility. And that's one of the reasons for the coaching company too, because so often I will see loan officers go to the software or go to a lender and get a very generic quote, which is just one structure. And the reverse mortgage is so flexible. It's meant to meet so many different needs. And if the loan officer doesn't even understand that, then how are they going to help their client understand how to structure these things? And so the structure is really, really important.
All right. Awesome. So that's really cool. So that definitely helps when you're talking about the concerns of the heirs and so forth. Let's go to we'll do this by tier. Okay. So we talked about worst case scenario, there's no equity left, right? Hey, what's our plans? Now, let's go to a scenario where someone, for whatever reason, the net decision is they just don't have a payment, right? Maybe depending on their qualifications, again, I'm not the expert on this. Maybe they're not able to derive a lump sum of money, that they want, but they can do a reverse mortgage and not have a payment anymore. Just thinking about that itself is an incredible benefit, because let me pull up some stats. Let's talk about some of these stats and how this impacts these people. And in preparation for our meeting, I found that 42% of people retiring right now do not have any form of retirement fund other than Social Security. 42%. Now, since I'm going into financial planning and adding those very valuable skill sets, for my clients, that is alarming. That is 5-alarm fire kind of alarm. 42% have nothing but Social Security. So they just plan on working till they're dead. 42%. Out of let's see here. 10,000 baby boomers retire every day. Day, not month, day. They hit 65, and a lot of them are like, all right, I can get social, and I would like to rather call it social insecurity. We have the stats of Social Security is not going to be fully solvent. What was it? I think it's 80% by 2032, I think, is the fact that of what they're looking at paying out. You get like 80% of your benefit, which is already ridiculously low. And then for some people, they're going to be taxed on that. It's like you already were taxed up out your gourd to get this benefits, and now you're going to get taxed again. And then when you factor in inflation, they are screwed. So they have to go to work, whether or not they physically can or not. And so this is where I think we're going to see a lot of people migrating who are not educated on what they can do with the reverse mortgage. And so I think there's such a strong group of people as clients, as citizens, who need to be aware of this just for their own housing. So just for that first line scenario, they're not building wealth. They just need to cut costs. They can stay in their home as long as they keep their taxes and insurance, paid up to current, and make sure that, the yard doesn't look like they're hoarders, right? Taking care of their property, but that they can stay in their home. Whereas a lot of people right now, they're panicking, wondering, I don't see a way. I'm thinking I'm going to lose my house, or they have to sell their house. It's like, no, there is this way if you're able to. That alarming number, 42%, 2 out of every 5 people. I'm just imagining putting people into a room and just dividing that up and say, oh, okay, statistically, you have nothing for savings. They may be in a situation currently where they don't have enough money in their budget to even get to the end of the month. They got more time at the end of their budget than they got money. And so when I think of that in context of this reverse mortgage, of how that truly is life-changing in that aspect, they're not going to necessarily have to sell their house, move in with family, although some people are going to choose to opt in to do that. Some people don't want to, because that's where all their memories are at. That's incredible. But let's go talk to the next tier. So talking about as far as building wealth, people was like, you know what? I have a financial planner, or I want to get one. And there's an opportunity to take some assets out of this. What have you noticed for some of your clients who leverage using a financial planner? They have a person that they can talk with, not their uncle who doesn't know anything, about whatever, but someone who actually knows, hey, how can we leverage this asset to build wealth that will outperform the mortgage itself? What have you noticed from your observations?
Yeah, I love this kind of conversation because this is really my bread and butter. I have a finance and econ degree. I was in real estate. I really appreciate homes. And then I worked at Northwestern Mutual for a very short stint through college and a little while after. So I really understand and love, okay, what makes the most sense financially? How can we maximize what we're doing here? And that's where the jumbo reverse mortgage product come into play. My clients kind of fall, and I think most reverse mortgage clients fall into these two pools. One, the one you laid out earlier, right? 42% of people have no plan. They don't have savings. Couple that with the stat I heard, which is at retirement age, the average homeowner in America, 83% of their wealth is tied in home equity. So how can their biggest asset by far, far. So we've got those clients. Now I call them the desperate pool, because unfortunately, they are often the clients who will not look into a reverse mortgage for fear. Oh, I heard they're scams. And so what happens is they try to wait till they absolutely have to. And what happens at that time frame? They miss their property taxes. They're late on their HOA. They rack up credit card debt. They have collections. And then it's hard to get that person qualified because there is still qualifying standards. It's still a mortgage. And so we have the clients that fall into that pool. Then this next pool is my absolute favorite. I have a client who is near and dear to my heart. He calls me his fairy godmother. What we did with his mortgage was he had about a $2 million, I think it was $2 million at the time, 3-unit place. So really smart guy. He had 2 units he was renting out. He lived in the main house, which is a great setup for a reverse mortgage. And we pulled out about $400,000. Well, he's a really savvy investor himself. So he took that money and he didn't place it with anyone else. He did it himself, turned it into 1.2 million in 4 years.
Wonderful.
Oh, it's just amazing. Now, that's not the common story. I wouldn't recommend that because, to anyone, right? He knew what he was doing. He was a savvy investor himself. But I do have other clients who have very savvy investors. One working with Northwestern Mutual right now. They're taking out, this file is literally happening right now. It's a $4 million property. They have a 1.4 million mortgage, which requires a payment. And when we looked at the numbers over time, we could have made that payment go away, but they're comfortable paying it. They have money. And so what we did instead is we did this other type of reverse mortgage where we're going to leave that first mortgage in place at that lower interest rate. They're going to keep making the payment on it, but we're doing a second mortgage. We're going to pull out 800,000 and the interest rate's about 10% on that particular one right now in our environment. But they're getting 18% elsewhere at their Northwestern Mutual. And so they said, "Oh, all day."
Real quick, that 18% is compound interest, unlike the mortgage.
Well, the mortgage will be compound, no payments made. It does compound over time.
Yeah, but it's a different type of compound. Like when you look at like the true, like what true compound interest, how it plays out, having it with that financial planner and how the magic of compound interest really works, it's incredible. But keep going. Sorry.
It's better at the investment than it is on the mortgage. It doesn't compound as quickly.
Yeah, it's a whole lot different. Yeah, it's special.
Oh, I didn't even know that. Thank you for sharing. That's huge. So yeah, then the plan is they're going to take the interest from this 800,000 that they're investing, and now that's going to make their mortgage payment, all the while paying down the 1.4 mortgage. So it's the equity position over time. I think we looked 10 years out, and they're only going from, where are they at right now? They've got 2.6. They're actually increasing because of appreciation. So they're going from 2.6 to 3.3 over 10 years by doing this. So more equity over time, which is mind blowing when you actually see the numbers. And then they're be able to invest this. Not everyone's going to have someone who can invest well, safely at 18%, but these people do.
Yeah.
And so that's not the main. These are some kind of extreme examples I love, but I'll take another one. I have a $2 million property, and his main goal is to not use more of his assets. So he just wants to make the mortgage payment stop. He's got an $800,000 mortgage. It's about $6,000 a month. He said, "Can I do something different here? Can I stop taking from my retirement account and putting it into the house?" I said, "Yeah. Let's just stop that activity." And just by stopping that $6,000 a month, going over every month, over 5-10 years, oh my gosh, the what is it, AUM, the assets under management, his whole portfolio was so much bigger because he's not draining it every month.
Yes.
So that's a strategy I think almost everybody should do.
Yeah.
With a reverse mortgage, with a regular mortgage, it's like a window, right? You put your payment through the window, they take it, they close the window. But with a reverse mortgage, you can do that. You can make payments, and some people will, but the window's open. You can easily pull it right back out. And so that's one of my favorite parts is in retirement, get control over your cash flow. And this is a really good way to do it.
Yeah. So for my financially astute clients, and clients who are like, you know what, we're playing the game right. One of the great things that you mentioned earlier is reverse mortgage is tied to the collateral. It's not tied to your credit. So if it's not tied to your credit, it's not tied to your debt to income ratio. And so some people, they can use that money from the reverse mortgage. They can buy investment properties, right? You can, 20, 25%, depending on the different program and the lender, you can use that money by just one of many different kind of creative solutions. And they're only really limited to, the conversation, as far as the creativity of how to build wealth. For example, out of that $400,000, say someone says, you know what, I want to have 25% or 50% of my portfolio tied to real estate in some way, right? So they're taking equity from their house. It's still theirs, their equity. They're just reallocating how they want to do it. But now they put it into an investment property. They have cash flow coming from that. They have appreciation from that property, the tax write-offs from that property. And I mean, there's so many different kind of ways that they can grow that asset that they can't if they just let the house be normal, right? Not capitalize on some of the financial tools there. And I love having like a war room sandbox like scenario with a client. I'm like, hey, here's the kind of assets you have. Let's look at a couple different asset classes based on your risk threshold and what you feel is going around the corner. I'll give you my professional advice, but here, let's talk about what you feel comfortable with. Because let's get real here. No matter what someone's professional advice is, if you don't feel comfortable with it, you're not going to follow it. And I've yet to find that many people who don't feel comfortable on decisions and that they love sticking to it, because buyer's remorse, they get out of it. Right. And so, hey, what do you feel's, going on with this particular environment? Let's see how we can sandbox this and go through some scenarios. And there is not a better product to have a sandbox scenario with than a reverse mortgage. Because if someone has a reverse mortgage, they have that assets, they have so much freedom of what they can choose to do if they've been playing their cards correctly. And it's so much more than let me just sit on my money. Let me put it in the mattress. There's so many ways and there's so many financial products that are performing really, really well. There's so many financial products that have guarantees to not go down. There are many that are out there that many people are unaware of, and they just don't know how to get the assets for it. And I think, reverse mortgage candidate can, if they structure it right, if they're working with someone correctly, they get the right kind of reverse mortgage. And then it's like, hey, I got this. How do I want to do it? They can leave a much bigger inheritance for their heirs than if they did nothing and just kept the house free and clear, right? They can do so much better if they're willing to have that conversation and explore options. And I think that's a lot better. And in addition to that, they can have a much better lifestyle while they're living. So they get to enjoy their retirement versus exist, and for many cases, like you're talking about, if I had to eat tuna every day, oof, that's not existing. That's not living. I mean, you're alive, but I don't even know if I would consider that living. Why don't you go ahead and share another success story, something that you have found, or maybe not a success story. What's continually driving you at this stage, and what you foresee with 2024, and then wrap up how people can get a hold of you. How about that? You have the final word.
Yeah. Well, I do want to address one. You mentioned, have a second property, get the reverse, then buy that second investment home. One of my favorite strategies, because what people don't account for is now you have two appreciating assets and pretty big numbers, right? We're talking properties. And so you can leave one free and clear to the kids. The other has the reverse. They can pay it off if they want. They can sell the home if they want, but you've turned your one home into two, and tying your tying your retirement income to property values and rental income is not a bad thing. That goes up, and it doesn't go away. I love that part. The property is there. So I really love that strategy. It's one of my absolute favorites. I've had clients buy a second home that then they put their kids in, which, millennials, Gen X, Gen Z, they're not able to buy like their parents were. So having that ability is huge too.
To the
okay,
point,
some
real
of
quick,
the
that can answer the inheritance question. Maybe it's like, what? Well, how about we're going to do your advance on your inheritance? We're going to help you buy your first house. You're not going to inherit this house. Hey, we're going to help you with the down payment and get you that house. And now you just handled the heir question. You just handled that. I'm sorry. I told you got a final word. I was too excited. Keep going.
I love it. I love it because you look across millennials, you look across Gen Z, they're trying to get their lives started. They're trying to have kids and they can't afford it because housing rent is so astronomical. And the other part is I love when I get to see my clients enjoy giving their inheritance to their kids and enjoying it with them.
Yes.
Not that they should give all of it because who knows how long you're going to live, but if you can give the down payment and suddenly your kids who you are worried about that would never become homeowners are homeowners. Oh my gosh, does it really matter if they inherit 500,000, a million in 20, 30 years? The reality is people live so long that when they actually come to terms in these conversations we have, when they come to terms with, well, I guess you're right. By the time my kid inherits, they're probably going to be retired themselves. This probably isn't going to have that big of an impact on them, but gosh, they need help now.
Yes.
And so that is definitely one of the biggest things. I apologize. I went blank. What was I supposed to be addressing? I was so
No,
excited
that's
to talk
fine.
about that one.
Your final thoughts and how people can get a hold of you directly.
Thanks. Final thoughts is just don't be afraid of any financial product, whether it be a reverse mortgage or any other type of financial product. To really move forward, my favorite clients are well-educated clients who understand their options, understand how the things work, and then choose. And the worst situations are when they're just too afraid to ever look into anything, and then that fear blocks them from being a well-educated consumer, a well-educated investor. And they don't think of these things, right? Having two appreciating assets, two houses that you own, that can really make a big impact on your estate. It's been proven. They did a study that a reverse mortgage as the last resort doesn't leave money like a reverse mortgage put in place early.
Yeah.
And so put in place early is the planners, the people willing to look into things and find out their options, coordinate the strategy. There's a whole podcast we could do on the coordinated withdrawal strategy, where during down markets, you take from the reverse mortgage, during up markets, you take from your assets and you
Yes.
coordinate. And it's just a really, really beautiful strategy. So those are my last thoughts. Don't be afraid to look into it because of what you've heard. The reverse mortgage has changed a lot over time. There's been a lot of really big rules, protections built in. Today's reverse mortgage looks nothing like it did 20 years ago. And some people are still based on that 20-year ago. So whether you're a loan officer or a person looking for a reverse for yourselves, or for someone that you love or care about, please reach out to me. I'll give you my personal phone number. It is 619-993-3882. I'm at a company called Reverse Loan Solutions, and I can work in many states. And then I also have the coaching company. So if you're a loan officer looking to learn this product, learn it well, collapse the 10 years it took me to get this good into like 6 months to a year, I want you on my masterminds. I want you in my coaching calls. I want you in the courses that we have. And you'll find that at learningreverse.com. And Tom, thank you so much for having me. This has been a really cool conversation.
It has been wonderful. Thank you so very much. And I consider you a friend now, more than just following someone on Facebook. This has been really wonderful. And to rub shoulders with industry icons, you truly are the queen of reverse mortgages. I know you're very humble about it, but you truly are. And but to work with people who you can just get the good vibes, you know that their clients are in great hands. And it's been wonderful. Thank you so very much. Thank you for watching and listening in to today's episode. Please like, share, and subscribe so we can strengthen our mission and get the message out to others on how to leverage to build wealth.